So Premier Doug Ford went to Ottawa on Monday morning. He met with Prime Minister Carney, and when he came out of the meeting, everybody seemed to be quite happy, cordial. I know the Premier said they had a great conversation. I know the Prime Minister was very much. It looked like he was quite happy with the conversation. Not so sure what was accomplished. I haven't really heard much, or we haven't really heard much from the Premier since. I know, and we all know, because the Premier made it very known that his idea, or why he was going to Ottawa on Monday, was to have a conversation about stimulating the Ontario and Canadian economy. And how would we do this? By cutting taxes and hopefully, if obviously not in the jurisdiction of the Prime Minister or the Premier, but hopefully getting the Prime Minister on board, perhaps to talk with or to speak to the Bank of Canada about a cut in interest rates. Both of those things, in my opinion, are so important. If we are all hands on deck to fight this trade war with the US, to try and stimulate our economy, which seems to be pretty flat right now, we haven't dipped into negative territory. So we haven't heard the word recession as yet, but we're pretty much flatlining around the zero mark, or break even, if you will. So we're not growing, we're not in decline or recession. We're just kind of moving sideways. And that really isn't good enough. And we're hearing more and more about jobs being, unfortunately, lost by a number of individuals in different sectors, whether it's the steel industry, the automobile industry, copper, any of the base metals, mining in general, or whether it's just simply in small businesses throughout Ontario and the country as a whole. We're seeing jobs decline, and we saw our last jobs report talk to us or showed us that we're seeing a country that is definitely not in growth mode. So in talking to the Premier, I expressed my concern. The Premier agreed. And, he's trying to do something about it. He's trying to get the Prime Minister to cut taxes or consider cutting taxes. We are one of the highest jurisdictions for taxes in North America. Interest rates, yes, they have come down quite a bit in the last few years, but with an inflation rate under what the Bank of Canada would like to see, which is a 2% rate. We came in at 1.7 most recently. Why aren't we cutting interest rates as well? Why aren't we trying to do whatever it takes to stimulate our economy? And this is the question I believe that Premier Doug Ford spoke to Prime Minister Carney about. As I said, not sure what the outcome is or will be. I believe we may see a budget being tabled in the fall. So perhaps we will get some more information in the coming weeks about maybe a tax cut of substance. I know we did get a tax cut of 1% when Prime Minister Carney was elected, but that truly isn't enough. It puts maybe a savings of $300 in the pockets of Canadians, which may buy you dinner one night. But truly, we need a meaningful tax cut. We need to bring down taxes to compete with the US. We're doing great things on deregulation. We're trying to forge trade relationships around the globe, but we need to be more competitive. And how are you going to be more competitive? Cut taxes and cut interest rates. Cut personal tax, cut corporate tax. We need to be as competitive as we ever going to be able to compete with our neighbors to the south, because that's what they're doing. And as this trade war lingers on, we know next year USMCA will be up for negotiation in 2026. And I believe you're going to see some changes. I'm sure President Trump, will be making changes to that agreement, and who knows where that will leave us. So I think we need to make changes to make our country a better place to do business. We need to do it now. We don't want to wait until 2026 when the rules change, the trade deal changes with the US and Mexico. We want to do that now. And so I think a great time and a great call by the Premier to go to Ottawa to speak about these kinds of things. Our first chart here that we have in this segment actually talks about inflation. You see here our inflation rate, 1.7%, Bank of Canada rate, 2.75%. Again, a bigger gap now. Target for inflation is 2%. I think there's a lot of room there. You have a full percentage point between the Bank of Canada rate and the actual inflation rate to cut interest rates 1, maybe 2 times before the end of the year. Let's bring down interest rates. Let's start to stimulate this economy, start to stimulate the housing market. We're hearing a slowdown, new builds, these things, the housing industry slowing. Just go around and talk to some of the people that are trying to sell their homes now. In a lot of areas in the GTA, Greater Toronto Area, you're finding people having to lower the prices to sell their homes in certain places. So let's try and bring down interest rates. I think that's a fantastic idea. Our next chart shows where we sit as a country with respect to international tax competitiveness. And if you look here, you can see the red circles show us. You can see Canada is 26th in corporate tax, 31st in individual taxes. Compare that to the US, 20th in corporate tax, and 17th in individual taxes. So how are we going to compete if we are charging 50% tax as our highest tax bracket, 54% for some individuals? I understand we are constantly concerned about people in the lower brackets. People aren't fortunate enough to make as much, and I agree. So let's make a tax cut right across the board. All brackets. Let's bring them down something meaningful, 10%, 15% perhaps. Let's become this place, this country where everybody wants to do business in and with. And in my opinion, I think the only way to do that is to make it a great place to work. Keep money in the hands of individuals, in the hands of the businesses. And if you do that, as the Premier says, people will spend money. They'll go shopping. They'll buy flat screen TVs. They will try to grow their businesses. But if you make it very difficult, if we as a government here in this country continue to make it difficult for businesses to grow because they can't borrow money at low rates, because everything they make is taxed at such a high level that they don't have as much money left over to do the things they want to do, then how do we expect to grow our country at a time when we really need the growth? And so very, very important. As you can tell, I'm very passionate about this topic. We need to cut taxes, and we need to cut them meaningfully, and we need to follow that with a cut in interest rates. And then, and only then, in my opinion, will we be able to be a lot more competitive with our neighbors to the south and competitive on a global scale.